Hi everybody. In this video, I'm going to show you 10 concepts that are frequently tested on the CPA exam, 10 that you definitely have to know and recognize. Some of these are going to seem easy and you'll say, that's obvious, O'Reilly. Yes, well, they don't just always ask it in an obvious way. They sometimes hide it in what looks to be a complicated question. But if you get good at recognizing there are these certain concepts that they ask repeatedly, they just hide them, surrounding them with other information. With practice, you can get good at recognizing these. Number one, and these are in no particular order. Number one, you have to know that auditors provide reasonable assurance. You need to know that phrase. They provide reasonable assurance that the statements are free of material misstatements, not misstatements, material misstatements. And combined with this concept, auditors do not provide guarantees. Reasonable assurance. It's stated in the audit opinion. Number two, management of the client is responsible for the financial statements, not the auditors. The financial statements are prepared by the management, not the auditors. What is the auditor's responsibility then? Well, you could say the auditor's responsibility is to express an opinion. That's it. Express an opinion. If you want to dig a little deeper into auditor responsibilities, then you could go one level down. So expressing an opinion is zoomed way out. One level closer, you would say, auditor has a responsibility to follow generally accepted auditing standards, not GAAP. Make sure there's an S on the end. And if it's a publicly traded company, they also have to follow PCAOB standards. That's how an auditor defends themselves in court if they're ever sued for negligence. They demonstrate in court that they complied with standards. Not that they were perfect, not that they didn't make mistakes, but they complied with GAS. I'm assuming that you know the best type of opinion is unqualified or unmodified. You should know instantly, top of your head, the two most common reasons to qualify the audit opinion. Qualified opinion. Two main reasons that happens: scope limitation, client didn't follow GAAP. Those are the two by far most common. You should not have to pause to think about those. What is a scope limitation? It's where you weren't able to gather enough evidence. Sometimes it's because the client blocked you from seeing the evidence. That would be very bad. But more often it's just the evidence doesn't exist. It doesn't exist enough for the auditor to get reasonable assurance. B, failure to follow GAAP, and for some reason the client refuses to change. That said, even if the client refuses to change, that'll be okay if the misstatement is not material. You have to understand this concept of materiality. Anything not material, the auditor does not care about. Some clients want us to tell them everything that's wrong. They want their books to be as perfect as possible, but the auditor is only looking for material misstatements. So misstatements that are not material, they don't have to be adjusted. The client can still get an unqualified, unmodified opinion. You should have very quick memory of this phrase. Auditors have to find sufficient, appropriate evidence to support their opinion. Sufficient, is it enough? Appropriate, has to be the right kind of evidence. Make sure you know those terms. Make sure they're automatic. Auditors have to have sufficient, appropriate evidence to give them a reasonable basis for their opinion. Remember, it's an opinion, it's not a guarantee. Think about in a court situation. If an auditor is being sued for negligence, the auditor's defense is that they collected sufficient, appropriate evidence that gave them a reasonable basis for the opinion they issued, and that they complied with GAS. You should know the phrase management fraud. Management fraud is not the management stealing office supplies. Management fraud is the management intentionally misreporting the numbers in the financial statements. Why are they doing that? They're doing it to get a bonus or to hit an earnings target that financial analysts were looking for to help make the stock price go up. A company comes to you, wants to hire you to audit their financial statements. It's potentially a new client for you. Before you accept that client, you are required by GAS standards to contact the auditor who recently did an audit for that company, the predecessor auditor. If one doesn't exist, no problem. But if one exists, you are required to contact that auditor. Why is it a requirement? Because it's a good idea. It's probably an uncomfortable phone call, and a lot of auditors would avoid doing it if it wasn't required. Another phrase you got to know about: audit evidence. There's 3 characteristics: timing, nature, and extent. Timing is on the calendar. When do you collect the audit evidence? The nature is what was the audit evidence you collected, and extent is how many you collected. So for example, you might be looking at confirming accounts receivables. The extent is how many of the receivables did you get confirmations on. Each of those 3 are independent of each other and can be changed, and as you change those, the quality of the evidence would change. Speaking of audit procedures, they come in basically 2 flavors: substantive testing and test of controls. Hopefully you remember from your first auditing class. Substantive test, you are going after the substance of the account. You're testing the actual dollar amounts. Test of controls, you're testing the client's procedures. Do they follow their own procedures? Knowing the difference and being very clear on the difference can help you eliminate some of the wrong answers in a CPA exam question, because they might ask you which of the following is a substantive test that did blank. And one of the answers won't be a substantive test, it'll be a test of controls. So you can eliminate that as an answer choice because you know that one's not a substantive test, that one was a test of controls, therefore it cannot be the right answer if the question asked specifically about a substantive test. I said I was going to give you 10, but this is ECU. We go the extra mile. Here's number 11, analytical procedures. You should know they are used all over the audit. They are used in the planning phase to help plan the audit. They are used during the audit as audit evidence itself. And you're not done. At the final stage of the audit, before you issue that audit opinion, one of the last things auditors should do is use analytical procedures again to make sure they're not missing any major mistakes. And there you go. Those are my 11 initial concepts that you have to know very well. Recognize them when they show up in questions. It'll get you to answer a lot of CPA exam questions right, which will get you a long way towards passing the audit section of the CPA exam. You don't want to skip any of these 11. All 11 vital. If you're going to pass the auditing section of the CPA exam, you got to get the easy stuff right. Question: the ultimate purpose. So before you read anything else, you have to recognize when they use a phrase like the ultimate purpose, they want you zooming out. Very big picture. The ultimate purpose of assessing control risk in a financial statement audit is to contribute to the auditor's evaluation of the risk that, now the key to this is recognizing you have to zoom all the way out. You are standing on the moon, looking at the earth. What is the ultimate purpose of what the auditor is doing? You want to go through A, B, C, D. Which one is zoomed out the furthest? The answer is D. Ultimately, what the auditor cares about is making sure there are not material misstatements in the financial statements. Answer A, far too zoomed in, far too specific. B says the collective effect of the control environment may not achieve the control objectives. That's not the auditor's ultimate purpose. That is important, but again, not the auditor's ultimate purpose. Second question: which of the following is an analytical procedure that an auditor most likely would perform when, and again, the very important phrase, planning an audit? Planning. So think about, you're trying to plan an audit. Maybe it's a new client. You don't know much about this client. You're just trying to plan. Which of these would help you plan? The best choice here is C, comparing current year balances to budgeted balances. Right? The budget is the client's own plan. How did the year vary from their strategy, from their plan? What's wrong with the other 3? Well, A is something you would do during the audit, not in the planning phase. B says reconciling personnel and payroll files to identify terminated employees. Far too specific, far too zoomed in. Would not do that in the planning phase. And D says recalculating interest expense based on notes payable. Again, too specific an answer, right? They want something more zoomed out, and also would not be done as part of planning. Third question: a corporate balance sheet indicates that one of the assets is a patent. Those are hard to audit, right? Hard to get the value of a patent. An auditor will most likely obtain evidence regarding the continuing validity and existence. Does the patent even exist? By obtaining written representation from which of the following options? This is one where there's no way to just memorize this. You have to be able to think your way through this type of question. And one good way to do it is to rule out answers. A says a patent attorney. That could be good. Patent attorney is going to be an expert on patents. I'm guessing they have access to databases about patents. They would be able to tell us if the patent still exists, right? Maybe it's expired. They don't last forever. They last 15 to 20 years. The continuing validity, they might be able to see if a different patent has sort of been taken over. So let's hold off on A. B says a regional state patent office. That almost sounds good, except that's not a real thing. Patents are handled at the federal level, not the state level. C says, maybe I should get representation from the person who invented the patent. Okay, some problems with that one. The patent inventor might have been 15 years ago. They might have sold the patent. They might not know if their patent even exists and if it's valid. They might not have kept up with it. So that might not be the best choice. D says the patent owner. Well, who is the patent owner? That's your client. So they're not the best one to give you evidence because they're very biased. So which of these is going to be knowledgeable and unbiased? A patent attorney will be our best choice. Another question, which of the following characteristics most likely would heighten an auditor's concern about the risk of material misstatements arising from fraudulent financial reporting? All right, so that last phrase is important. You're talking about management fraud, the management intentionally manipulating the numbers, and usually it's the income statement they are manipulating. The answer here is A. The industry is experiencing declining customer demand. Why? Why does that matter? Because that's putting extra pressure on the management to fake the numbers. Because the numbers are not growing naturally, they're actually shrinking. Well, that puts a lot of pressure on the management, so they might succumb to the pressure and start faking some of the numbers. B is not a financial reporting fraud. C isn't fraud at all. Bank reconciliations should include in-transit deposits. And D says equipment is often sold at a loss before being fully depreciated. Well, as long as they're reporting it correctly, then that's not fraudulent financial reporting. If A was not one of the options, D would be the second best choice because you could build a story about how that must mean they're not depreciating things as fast as they should, and that could be fraudulent financial reporting. But A is just such a better answer given the phrasing of the question about a characteristic, and it heightens your concern. If I know my client is experiencing declining business, I'm now concerned that they're going to start faking things to keep their jobs, to keep their bank loans, etc. Feel free to give me feedback on whether or not this video was useful at answering. If you start to see these 11 items getting questioned repeatedly, again, they get asked, the same question gets asked multiple different ways. But with practice, you'll start to recognize like, hey, they're asking me again about the auditor's ultimate responsibility. They're asking me again about what would make me qualify the audit opinion. Good luck.